Now, one sector that has done very well in the Indian market is the banking sector. The last 2 quarters, most banks have really hit it out of the park. They've done very, very well. We have the likes of Uday Kotak, the premier banker in the country, come out and say that it's a Goldilocks period for Kotak Mahindra Bank and for the banking sector in general as well. And that really reflects pretty much everything that there is to say of the banking sector over the last 2 quarters. But one particular bank over the last 2 months has lost 35% of its market capitalization, and that is City Union Bank. Let's try and zoom out and understand what's happened. There was a risk assessment report which is issued to most banks by the RBI. That's very, very normal, but that was issued to City Union Bank. And really what was flagged in that was that there was a divergence in the provisioning. What the RBI estimated was that the provisioning was more than 15% of what City Union Bank had actually provided for in FY22. And the regulation stipulates that if the provisioning is more than 15% of what the bank has already provided, then the bank ought to disclose that to market participants, to investors, as well as to exchanges. And that's exactly what City Union Bank did. But that wasn't really the key concern. The key concern was the second tier impact of this. The second tier impact of this is what I would say the conservativeness of the bank. The fact that the bank was not providing for its bad loans in the correct fashion. And that was what was really reflecting on investors, and that was really the red flag or the cue which investors took. And they lost confidence in the manner in which the bank was providing for its bad loans. And what therefore then went on to happen was the bank stock tanked 20% over the last 2 months or so. So that was one part of the story. Now we'll move to the other part. What resulted in a 15% fall in the stock price today? That was obviously followed by the results which came out late last week. So let me take you through the numbers. The net interest income went up 13% on a year-on-year basis, which, let me also try and comment, in an era where bank loans are growing at 20%, 13% is not the most impressive number when it comes to the net interest income growth. So maybe that is one of the other factors or the ancillary factors that has led to the fall today, and the loss in confidence, of course. The other piece is, of course, the elevated provisioning is what really impacted PAT. And that also created a little bit of a ripple effect among investors. The third piece is that there was a guidance which City Union Bank had given to its investors that it will grow its loan book at 15 to 18%. Now, they grew their loan book in Q3 at 12%. And they revised their loan guidance to say that they will grow below 15% for FY23 full year. That has, of course, now led to an even more severe loss of confidence after the risk assessment report by the RBI to say that the bank is not fully confident of growing in an environment where even an SBI is growing at 17% on a loan book size of 30 lakh crore, which is larger than what City Union Bank currently is at. So really, a couple of messages here which the market seem to have read through, and that's what's really causing the stock price to tank on City Union. The stock is down 35%, market cap at 10,000 crore versus the 15,000 crore it was at nearly the end of December.
If you like this video, then like, share and subscribe to ET Now.